Topic 1. A preliminary U.S.-Iran peace deal to be formally signed in Switzerland on Friday sparked an immediate market reaction. Europe's StoxX 600 hit a record high, while Asian and U.S. equities rose. Brent and WTI fell about 4 to 5% to three-month lows. Gold rose roughly 2%, the pound gained about 0.2%, and some emerging market assets recovered. The core agreement reportedly calls for an immediate, permanent halt to all military operations, reopening the Strait of Hormuz, with some U.S. voices pushing for toll-free passage, and lifting the U.S. naval blockade of Iranian ports. But sensitive issues such as nuclear terms, sanctions relief, and the release of frozen funds, Iran has cited roughly $25 billion, were deferred to 60 days of follow-up talks, and final wording has not been published, leaving major uncertainties. Markets are cautiously optimistic, but mindful that full reopening will require physical and logistical work, mine removal, ship and insurance arrangements, repair of Middle East production, and transport facilities. So supply normalization could take months, and verification and implementation risks will drive future price action. Topic 2. Fox agreed to buy Roku for about $22 billion in a cash and stock deal at $160 per share, with closing expected after regulatory and shareholder approvals, likely in the first half of 2027. Strategically, Fox aims to merge its live sports news and advertising inventory with Roku's platform, first-party data, and viewer reach. Roku reaches roughly 100 million households, operates the Roku channel, and reported Q1 advertising revenue of $613 million, plus 27% YY, to scale streaming and ad tech capabilities and improve targeted advertising. Roku will operate as an independent, open platform with CEO Anthony Wood staying on and joining Fox's board. Fox has secured about $12 billion of financing, cites $400 million annual cost synergies, and post-deal ownership split of roughly 73%. Fox shareholders, 27% Roku shareholders, but investors reacted nervously, with Fox shares plunging amid concerns over the premium paid, heavy debt financing, and regulatory risk. Topic 3. The U.S. imposed export controls requiring Anthropic to block foreign access to its cutting-edge models, Fable 5 and Mythos 5, for national security reasons, prompting the company to suspend access while senior Anthropic executives meet with the White House, Commerce, and other agencies to resolve the dispute. The administration accused Anthropic of recklessness, citing discovered jailbreak methods that can bypass safety guardrails, and reporting that multiple firms, including Amazon, raised concerns. Anthropic counters that the vulnerabilities are narrow and similar to issues in other public models, says regulators gave no detailed specifics, and asserts it is cooperating to restore access. The move sets a precedent for a U.S. kill switch on international distribution, boosting interest in open distribution Chinese models. Zhipu's shares jumped after it announced open, unlimited release of GLM 5.2, and raises IPO, investor, and deployment risks for Anthropic while reshaping the global open versus closed AI competition. Topic 4. SpaceX's IPO in June 2026 priced at $135 and closed its first day at $161 plus 19%, implying an approximate $2 trillion valuation, and veteran investor Ron Barron bought roughly $1 billion of additional shares on debut, expanding his stake to about $25 billion and signaling strong demand from some long-term holders. Index providers moved to allow quicker inclusion. NASDAQ cut listing to inclusion delays to 15 days, CRSP to 5 trading days, and other providers adjusted rules, meaning rapid indirect exposure through benchmarks and 401k plans is more likely, though S&P said it will keep a minimum 1-year wait and the small public float limits immediate index weight. Brokers imposed anti-flipping restrictions for retail IPO allocations. Examples: Fidelity 15 days, Robinhood 30 days, with penalties for violations. Retail received about 20% of allocations, and while faster index inclusion expands indirect access, retail,